Your industry is also getting very competitive, right? So many new players are coming in, newer fund houses. Then big international fund houses are all set to, make a splash, make an entry here. What do you think?
We are in a very great country called India, where the market is infinite. We have got less than 4 crore customers with mutual funds. Already, what Khelo India Khelo that is happening on the everybody wants to get into stock markets.
India Khelo.
I call it Khelo India Khelo because there are 8 crore people
Quick gains,
who have got demat accounts. So I see it as a very, very, very exciting opportunity, and I feel more players should come in. They will only grow the market, right? A lot of new digital players who have come in will only grow the market. So I'm very excited with the new players coming in. We will, I think the market will keep on growing. In India, we are in an infinite market, so we should not worry about new people coming in. It is a great opportunity that new guys will come with new innovation, new thinking. So it's good for us also.
Okay, now let me get down to brass tacks, because this is about making investing a little simpler for people who are watching the show. You tell us, looking at the market situation today, if someone is to put fresh money to work towards either a mutual fund or a PMS, what are the things they should keep in mind? How should they start? Should they stagger? Given today's context of geopolitics, rates, etc., and whatever is happening around us.
So without going into too much gyan on where the market is and what are the valuation levels of the market in, so there are opportunities always in the market. But right now, the way we are neither a very expensive market nor a very cheap market. I won't say that the markets are sitting on a bargain and the stocks are very cheap. It is difficult to get cheap stocks today, right? The way I invest every month, right? Whenever my salary comes, a big percentage of that goes into investment. So what do I do? If the markets are very fairly or low, slightly lower valued, then I will take a equity fund. But right now, the way the market is and the way taxation has changed for debt, the only way to get debt tax-free is by investing in the dynamic asset allocation category, the balance advantage category or the multi-asset category. There are two categories of SEBI. That is the balance advantage category and the multi-asset category, where if you invest in debt, since more than 65% is in equity, you will get debt also tax advantage. Right? You are not taxed the way debt funds are taxed.
The taxation is equity taxation for these two categories.
It's very good for the final investor. So in markets like this, when there is no clear-cut sign, I would go and invest in a category called as multi-asset, which is slightly more aggressive than balance. 65 to 70% is invested in equities, and the balance is invested in debt and gold.
Okay, so you have exposure to all three asset classes. That is something that you'd sort of suggest, and that's advice to an overall investor across ages.
So this month's salary will go in multi-asset.
Multi-asset funds, and now that explains why there is a plethora of these funds. Almost all AMCs are launching. If they hadn't had this category, everybody's launching the multi-asset category.
We have been having this category since 2004. It was called ICICI Prudential Dynamic Fund once upon a time. It was one of our favorite funds, which was dynamically investing in equity and debt. And from there, we discovered this balance advantage category. It was the original category was this multi-asset category.
Got it.
We have always believed in that because Indian markets will be volatile and volatility is good. Volatility makes you money. So because the Indian customer will be pro-cyclical, we have created these products which are counter-cyclical.